In the fast-paced world of technology and finance, British chip designer Arm Limited is gearing up for a landmark initial public offering that's making waves in the industry. So let's take a closer look at the details of this much-anticipated IPO. Arm, owned by SoftBank Group, is setting its sights on a massive valuation of over $52 billion, which would make it the most significant IPO of the year. In an updated filing released on Tuesday, SoftBank Group disclosed its intentions to divest approximately 10% of Arm's shares, with its IPO shares priced in the range of $47 to $51 each. This pricing strategy aims to generate a substantial infusion of capital, potentially raising up to an impressive $4.9 billion for its current owner, SoftBank. This strategic move coincides with Arm's management hitting the road to meet with potential investors and drum up support for their IPO. This is a particularly notable development because of its substantial size, making it a litmus test for the overall health of the IPO market. Another intriguing aspect of Arm's IPO is the presence of cornerstone investors, including some of Arm's very own customers. These influential players, including tech giants like Apple, Google, Nvidia, Samsung, Intel, and TSMC, have expressed their interest in purchasing Arm shares at the IPO price, amounting to a collective sum of $735 million in investment in Arm. In a further revelation, Tuesday's filing unveiled a significant development for Arm and one of its most prominent customers, Apple. The two companies have inked a new, long-term agreement that extends their partnership well into the future. This agreement solidifies Apple's access to Arm's cutting-edge chip designs, ensuring that the iPhone maker can continue to develop processors based on Arm's technology beyond 2040. This collaboration harks back to their shared history, with Apple having played a pivotal role in the creation of Arm as part of a joint venture back in 1990. However, it's worth noting that Qualcomm, a major mobile chip maker and an important Arm customer, is notably absent from the list of strategic backers. This absence is intriguing, given that the two companies are currently engaged in legal issues over intellectual property licensing issues, which adds a layer of complexity to their relationship. Now, let's crunch the numbers. Arm is aiming for a valuation range of $48 billion to $52 billion. If we factor in the shares allocated for Arm's top executives and employees, that valuation range expands to approximately $50 billion to $54 billion. At the same time, the valuation at which Arm is going public is notably lower than what was implied in a recent transaction with SoftBank's Vision Fund. But why is this IPO generating such a buzz? That hype isn't just about Arm, but it also represents a strategic move for SoftBank. Following the IPO, SoftBank will retain a majority stake in Arm, with ownership at 90.6%. So even though Arm is entering the public market, SoftBank remains deeply committed to its future. By reducing its stake, SoftBank stands to gain significantly if Arm's stock experiences substantial growth. Moreover, this IPO injects fresh capital into SoftBank, enabling the company to pursue its ambitious plans for investments in cutting-edge tech startups. However, SoftBank's ability to persuade investors to pay such a high valuation for Arm has been met with skepticism. James Anderson, a well-known tech investor in the UK, highlighted that Arm appeared to have missed out on several growth opportunities since SoftBank's takeover, particularly in rapidly expanding areas like cloud computing. This raises doubts about Arm's ability to achieve the desired valuation, despite its strength in the smartphone market. Furthermore, concerns have been raised about Arm's relevance in emerging fields like AI. Anderson emphasized that Arm may not be a dominant player in many areas of expansion and lacks a distinct advantage in AI-related developments. There's still some hope, as the group of financial institutions participating in Arm's IPO underwriting is a remarkable collection, featuring prominent names such as Barclays, Goldman Sachs, JP Morgan Chase, and Mizuho. Also, the advisory role for the IPO is being spearheaded by the boutique investment bank Rain Group, which has connections to SoftBank and counts Jeffrey Sine, one of its co-founders, as a member of Arm's board. So stay tuned as we follow this IPO spectacle closely, and let's see where Arm's journey in the stock market takes us. The tech world is watching with bated breath.